Let's start though with the markets, as we always do. I mentioned stocks, little change this morning. Comes after what was a very solid day for stocks yesterday after a disappointing jobs report on Friday. Joining me now in studio with more is Frank McKiernan. He's co-founder and managing partner at Third View Private Wealth. Frank, thanks for joining.
Thank you for having me, Kristen.
Yeah, it's good to have you on the show. A lot of signals out there. Of course, noise and signals probably for some investors. What are they telling you?
So we think a bull market just started in the beginning of April. Post-Liberation Day, earnings revisions have come down from plus 10% last May down to negative 25% post-Liberation Day. So when we saw those revisions take hold, we weren't surprised to see the market stage the 30% rebound from the lows that we have. We think that there are a constellation of risks on the horizon that we're watching, but we're very bullish near term here.
And what is creating this bullish thesis?
Well, you have a backdrop of monetary policy that I think is going to be set to ease in September following this jobs report that you mentioned last week. You have tax cuts, deregulation, all kind of funneling into the market at the same time. Plus, you have AI productivity gains, which have yet to take full hold.
How is trade shaping up in terms of these deals that the president is aiming to get, and what does that mean for equities?
I think it's been deals, deals, deals. I mean, Trump was out in the Middle East, I think last month, talking about how he's a deal junkie, and he's done nothing but deals ever since. Japan, Europe, India, Indonesia, you name it. I think he will want his presidency to be coined with doing a trade deal with China. And I think he will get that done. I think they're set to meet in September. I think he will absolutely get a deal done with China. That's obviously going to be positive for equity markets. It's been a big headwind, right? We had tariff rates going from 15% to 150%. I think the effective rate I read this morning is around 19%. So I think he wants to get a deal. I think corporate America wants him to get deals done. So it's optimistic for equities by and large.
How do the valuations look to you at these levels?
So we're fully priced. I mean, 22 times forward earnings. There's a lot of optimism priced into the market here. But if you look at history, it's rare to see multiple compression when you have above average earnings per share growth, which we have now. At the same time, you have Fed funds set to decline, which is obviously 2.5 to 3 cuts already priced in for this year, plus another 2.5, 3 next year. So you can say that they're expensive here, stocks, but with that backdrop, we're very constructive for valuation.
I do want to ask about what we should take away from the jobs report on Friday. Downward revisions to the prior 2 months, disappointing numbers when it came to last month as well. What does that tell us about the state of the economy and the path forward for interest rates?
I think we're slowing. I mean, I was shocked. I think everyone was shocked. We haven't seen revisions of that magnitude since COVID. Okay, so to see 260,000 jobs, what we thought were 2 great months, now look, mediocre at best. It's a concern. I think rates are going to adjust to that new normal. But I think this isn't a catastrophic economic event either. We're coming off of a period of high growth. Market has done very well. So it's normalizing in the labor market, which I think is good for this part of the economic cycle.
Of course, we've seen some big technology earnings as well. By and large, I think probably, to the upside in terms of the investor reaction. Earnings season still carrying on. What do we need to hear from corporate America as these reports keep coming in?
So last week, big tech earnings were very good. Ex-Tesla, I should say. Tesla was probably the standout on the downside. But the weight of these companies in the broader indices are so significant. I think NVIDIA just crossed 8%, which is larger than 5 sectors combined and almost as large as the industrials sector. So think about that just from a weighting perspective. So for better or worse, it's very important that NVIDIA in particular continues to do what it's doing to hold the market up. Now you can argue, well, that's probably a problem for the rest of the market, but we think, like I said before, we think earnings expectations are broadening out across small, mid, and large cap beyond the Mag 7. So I think earnings season ex Mag 7 has been 6.5%, have been beating, above estimates, 6.5%. So I think we're starting to see that broadening out in the market, which is good. But I thought Mag 7 numbers were fantastic. It reiterates how the AI narrative is taking form. I think Microsoft said that they processed over 500 trillion tokens year over year, which is up 7 times from last year. I mean, that in itself, that one data point just shows you that if you were skeptical 2 years ago about all this AI capex, this says that this is real, this is happening. Google, the same thing. So I think we're still 3rd or 4th innings in this whole AI cycle.
What about the dollar? We've seen the dollar depreciate in value this year. Do you think that that's a trend that persists or something that we can see turn around?
I think we start to see it turn back around. Dollar's down 12% year to date. That's also helped earnings as multinationals like Microsoft, for example, gets 50% of their revenues from overseas, so that's going to help as a tailwind. You have to remember, we've seen this vast outperformance over the last 10, 12 years of the U.S. versus the rest of the world. So again, just a small normalization of the dollar versus the rest of the world as capital flew from U.S. to overseas. But I don't think this is a situation where it's the end of the American exceptionalism, as some people may have pointed out.
Just quickly, Frank, any seasonality factors at play here in August and September that our viewers should know about?
Yes, definitely weaker. A lot of people are on vacation. Liquidity is definitely not as robust as it is. We have Jackson Hole coming up at the end of the month, which is always a focus point for the market. I'd expect Powell to give some pivoting guidance as far as, to the jobs report, some other indicators that have come out. So I think after Labor Day, I think we start to see some more volatility in the markets for sure. All
right, Frank McKiernan, he's co-founder and managing partner at Third View Private Wealth. Frank, thank you for joining.
Thanks so much, Kristen. Appreciate it.
Yep.